How the markets have fared thus far. European markets have taken a look at how things have fared out of that US-China trade deal. So a bit of a mixed picture on that front as well. On the local front, well, yesterday we saw some red market movement as well after having seen 2 days or so of positive numbers and some positive data coming through as well. Of course, it is still earnings season, so a couple of earnings news have certainly come out. The likes of Mr. Price even yesterday having put out some of their financial news and their earnings as well. We take a look at some currency news then as well. Of course, South African currencies have remained quite stable despite then the South African Reserve Bank deciding then to keep interest rates on hold at current levels. 6.5% for that repo rate, 10% for the prime lending rate. That has clearly been of a key significance on that front as well. The rand around 14.65 odd against that US dollar, 18.85 or so to that pound, and 16.24 a euro. Taking a look at the BRICS currencies, well, the Brazilian real is at 3.49 to the rand. The Chinese yuan will set you back 2.08 to their local currency. The Indian rupee at 0.2 to the rand, and the Russian ruble at 0.22 as well. Let's get to chat now to Warwick Lucas then, who joins us here in studio, of course, as we unpack that market movement. He does join us from Galileo Capital, should I say. Warwick, thank you so much for the time. Really appreciate it. Really great chatting to you as well as usual on a Friday. Big news still, I suppose, has been the trade war, but we never really know where it's going, really, do we?
Yeah, no. I think if you actually manage to ring fence it into a person, the trade war would actually be a bit of a psychological, a psychiatric patient. I mean, it was only a week or two ago we were getting all very excited that things were looking very peachy, and suddenly they're not so peachy. And this, after all, is supposed to be a segmental deal. So, let's see. And I mean, there are potential spoilers out there. North Korea, for example, has been very, very quiet, and that's something that can start warming up again going into the new year, as there was a timeline on sanctions on North Korea, and those don't appear to have been dealt with. So, yeah, there's going to be a lot more action in the Far East.
And some people might even ask then if the US even has any intention really here to actually have a trade deal in place, because now they've gone on to back Hong Kong, which of course will set them back quite a bit with regards to this trade deal, angering Beijing in the process.
Absolutely. I mean, Hong Kong at the end of the day is in some ways a bit, I would have thought, a sideshow. I mean, obviously we have concerns about democracy, etc., but it is a regional issue, and I mean, it's certainly not and shouldn't be germane to trade, and I think it's a relatively unwelcome complication.
Yeah. All right. Well, if we bring things back a little bit locally, the South African Reserve Bank deciding to keep interest rates on hold yesterday, 6.5% for that repo rate. No shocks there, really, were there?
Probably not, although 2 out of 5 voted for a cut, which is it's understandable. I mean, the economy is looking really, really weak, but on the other hand, I think the governor still, particularly given our growing odds of downgrade by Moody's, wants to be sure that we are maintaining real rates, that the rand is not an easy target for speculative attack and so on. So in the interest of stability, I guess, is what kept them on hold.
Do you think there's a sense of sustainability, though? I mean, the risks that he put out are a lot as well, but it felt like it could have been the perfect time to perhaps aid confidence in some way. Yes, fine, the fiscal narrative needs to be the one that's fixed, of course, first and foremost, and he made that very clear. Do you think he was just harping on that point, that is the one element that needs to be fixed before we get anything rolling on the monetary side?
Well, at a certain point, I think central banking stops being a science and starts being a little bit of an art. And I think this is where the artist interpretation may not agree with the mainstream. I mean, our own feeling is that it probably was an opportunity to cut. On the other hand, the SARB is kept awake at night, I think, by that budget deficit and the fiscal deficits. Generally, they're a problem, and they're not going away. And South Africa needs to offer a real return to foreign investors to keep being so kind as to fund our various deficits.
Yeah, certainly. Look, he does make some good points with regards to why he held interest rates where they are. Okay, very quickly, we are dealing with SAN. We'll give you an update on that story as well. Then we are here hearing that a deal has actually been struck. So we'll get word on exactly what has happened there. But also SA Express, however, on the other hand, had gone through a turnaround strategy. The CEO, the interim CEO anyway, Sizam Zimela, had said that hopefully by April this year, they would have turned the corner just a touch and they wouldn't need any more help from government. That's certainly not the case anymore.
Yeah, it looks like around about a 590 million rand loss there on what is really a small marginal regional airline. So, I mean, it's not big in anyone's lives particularly, but I mean, taxpayers can't be pleased. I mean, it's yet another potato peeler slice, shall we say, out of a very limited pool of tax funds available. So, yeah, no, this kind of nonsense can't carry on.
Yeah, certainly can't. Warwick, appreciate the time. Thank you so much for that. That's Warwick Lucas then from Galileo Capital joining us right here in studio for that conversation and that announcement. As I said a little bit earlier on as well, then we are getting some news.